Welcome back, my dear students. In the previous lecture, we have learned about the characteristics of divergence on a price action chart. From this lecture 1, we will learn another strong leading indicator, that is the Bollinger Bands Indicator. So in this lecture today, I will be talking to you about the basic characteristics of Bollinger Bands Indicator on a price action chart. Bollinger Bands are the trading tool used to determine entry and exit point for trade. The bands are used to determine overbought and oversold conditions. So let's start. Bollinger Bands are the technical analysis tool developed by John Bollinger in 1980 for trading stock. The bands build up a volatility indicator that measures the relative high or low of a security price in a relation to the previous trade. It can be used to determine how strongly an asset is rising and potentially reversing or losing strength. If an uptrend is strong, then it will reach the upper band regularly. When an uptrend reaches the upper band, then that indicates the stock is pushing higher and trader can be opportunity to take a buy decision. On the other hand, when the price is falling, then it is potentially reversing to an upside trend. This is the strong downtrend. The price will run along the lower band and then it shows the selling activity is strong. You also look for Bollinger Squeeze and Bollinger Bounce, which are used as indicator for level of support and resistance. Squeeze when the upper and lower band contract toward the moving average, and it also provides a breakout of an asset. On the other hand, Bollinger Bounce when the price movement hit the upper band and bounce back down, then it might be indicate of an upcoming retracement. Breakout Bollinger Squeeze when the upper and lower Bollinger Bands are moving toward each other and then the distance between the upper and lower band is narrow. It is suggests that this market is consolidation. A consolidation phase suggests that the market is non-directional for the time being and now range bound in nature. These Bollinger Bands will essentially move closer to the price and at some stage appear to the squeezing the price. You will wait for valid breakout. The high and lows of a consolidation may be marked with the trend lines. When price move above the high of the consolidation, then it considered of an upside breakout. While a price close below the low of a consolidation, then it closer to downside breakout. The Bollinger Bands can now be used as a filter for these breakout trade scenarios. When using Bollinger Bands is to identify overbought and oversold market condition when the price of the asset break below the lower bands of a Bollinger Bands. Price have to fallen too much and due to the bounce. On the other hand, when the price break above the upper band, the market is overbought and due to the pullback. So not more today. Have a nice day. Goodbye.